The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with me. We're a minute or two late this morning, for which I apologise. And Toddy, my friend, of course, he's a mind reader, a very, very long-term Danielcode member, and lives in Southern California, and a good bloke with it. And thank you for that, Toddy. This is a slightly new program that I'm using today. And it doesn't give the sort of beeps and burps that the old one did. So I had little idea whether you could hear me all right. So I'm so glad you can. And I guess if you can hear me in Southern California, you can pretty well hear me anywhere. And Hank as well down at the Hunter Valley, which is our sort of equivalent, if you like, to Lexington, Kentucky. It's where all the big horse studs are in Australia. And as I say, the grass is so great, you could eat it yourself. Anyway, thank you so much for being with me in the States and in Canada, our friends, and it's good afternoon to our friends across the ditch in New Zealand, the Shaky Isles, the land of the great white long white cloud, and it's good morning to our friends in Queensland, where we do not have daylight saving. And it's good afternoon to the rest of Australia. So that's grand. So it's good to have you all with us. And we have got a lot to talk about today. Look at this. Anthony's with us down in Sydney. Grand to have you. David, good to have you with us, David. I know you're a keen follower. Donald's with us. Another David's with us. A couple of Davids. Let's have a look here. We've got all our normal friends here. It's wonderful. Gabe's with us over in California, as is Greg Palladini, of course, a great stalwart of ours. And we've got Hank down in the Hunter Valley. His claim to fame, apart from being a wonderful bloke, is he's the father of Justin, who has done so much research for us this year, and he's sure a very, very proud father. And of course, we've got Justin himself with us. Glad to have you, my friend, of course, very much so. Mark's with us, plenty of Marks, a couple of Roberts. Here we are. Here's Mark L, of course. He's a very standout guy, one of our best and longest term supporters, a elite Danielcode trader of note. We've got here Luke, is good to have you with us, my friend, and plenty of Mikes, and Mike over in New Zealand. Good to have you with us, my friend. Nathan, of course. Peter Mack, who's not a day trader. There's a lot of other Peters with him. Good to have all of you Peters with us. Sean down in Adelaide. I know most of these guys. Toddy, of course, in Southern California, as I've said. And Vicky, grand to have you with us, Vicky. We don't have many ladies, and we would like more, and we always like to welcome them when we have them. Okay, moving on, folks. Our thought today, or my thought for the last few days, is that all markets are mean reverting. That's the basic concept of all financial markets, that at some stage or another, they will revert to the mean from the extremes. The mean is just putting another fancy word for the median, if you like. The average is what it means. It's got a specific meaning, actually, but that's the basis. And if this market reverts to the mean, I can tell you the mean is a very, very long way away. And these equity markets, NASDAQ, S&P in particular, they're looking more like blow-off tops that you would see in crude oil or natural gas, or sometimes in other commodities, but they're looking very unlike an equities market. And our equities, the US equities, when I say R, that's a very paternal R, because that's what we trade. They are quite extraordinary, and there must be a reversion to the mean, I would think, sooner rather than later. Let's have a look what we've got here. This is just a little reminder to you folks. Back in February 2020, That was the COVID flash crash, the shortest bear market in history, and it lasted for 24 days and it was all over. But be cognizant, when markets correct, the reality is that almost all of them just sort of roll over and they take a few months before they really come to a decision about what they're doing. But that's what we saw at the 2009 top, 2007 top, I should say. It took many, many months before it really gathered up some steam. But a little bit earlier than that, the dot-com top in 2000, that took a few weeks, and boy, then it started to gain some pressure. So you all know, I know if you've done Danielcode tutorials, you all know how to trade short as well as long. In other words, when you're short, you've sold something, you've sold a contract. And the great beauty about futures is that you can sell a contract as conveniently as you can buy a contract. And we get paid exactly the same when markets are going down as we do when they're going up. And the old adage is that markets go up by the stairs. As you can see, the big up move after the COVID flash crash, going upstairs, going upstairs, going upstairs. But bear markets, they go down by the elevator. That's the saying, up by the stairs and down by the elevator. So don't think it can't happen. And on some evidence at the moment, it might happen a whole lot earlier than you're thinking. And for those of you who are not subscribed to Frank DB's commentary on the fourth seal in the S&P, all I'm going to say to you is you should be reading it and you should be getting yourself subscribed to that service really, really fast. And there are, I think, very good reasons to be thinking about that. Okay, so having reminded you of that, let's move on and look what we've got. Donald Trump, Person of the Year, absolutely deservedly. This is Time magazine, who have pretty much had a hate on Trump over the years, as left-wing publications do generally. And today he was ringing the opening bell at the New York Stock Exchange. And all the traders broke out in chants of USA, USA. Wonderful, isn't it? Anyway, there's a nice picture of the Donald on Time magazine as Person of the Year, and no doubt that's better earned than almost any other you could think of. It's just been absolutely extraordinary what this man has done, and the obstacles he's had to overcome, the problems he's had, the lawfare provided by Biden and his Department of Justice, just not just him, particularly the state prosecutors in New York, absolutely disgraceful. Disgraceful. So I'm glad to see that. He has deserved it more than anyone else I can think of for a long time. Okay, so there he is, and I think probably what this means is we might be very close to peak euphoria. Fortune magazine ran a very big in-depth article this week, and it was titled "The Mother of All Bubbles," and it was saying basically that the US is sucking money away from the rest of the world, as one of their market experts say. Now, we know about market experts. So simply being a market expert doesn't mean you know very much about markets at all. It just means you're a good talker or writer, as the case might be. And he was supported, his name was Sharma. He was supported by L. Arian, some of you will know, used to be a bond investor, had a big hedge fund, joint hedge fund in bonds, and he agrees with this statement. So in my view, that's probably the best reason to take it with a pinch of salt. But nevertheless, there's some interesting factual stuff in here, and that Sharma is saying this is a bubble of epic proportions, and he backs it up by saying awe of American exceptionalism in markets has now gone too far. Well, that's a qualitative decision that may or may not be right. It's certainly gone to an extreme level. I think we can all agree with that. What's interesting is that US companies now account for 70% of the leading global stock index, up from 30% in the 1980s, whilst the US economy's share of global GDP is just 27%. But it accounts for 70% of global stock indices. Extraordinary, isn't it? Extraordinary. And that's what he meant by saying a great sucking sound is coming out. So here's Mr. Trump, who's going to have such a huge influence on what markets do going forward. And you can see that Time magazine treated him with absolute disdain the last time he was in a powerful position. And the comment was, what a difference 8 years can make, and absolutely shocking that that first photo was drawing was ever published. So light relief is brought to us nonetheless by Janet Yellen, who's the US Treasurer, as most of you would know. Now, Janet has the distinction of never having had a job in private business, private industry. She's been a career sucker on the government tit all of her life. But she had a meeting with the new incoming guy, who Trump's chosen to be the new US Treasurer, and he's a very well-known and very, very successful hedge fund guy. Who knows all about the reality of markets. But Janet was obviously in a mood of hilarity, I would have said. If here she is, I am concerned about fiscal sustainability, and I am sorry that we haven't made more progress, she said, adding, I believe that the deficit needs to be brought down, especially now that we're in an environment of higher interest rates. Well, what a load of rubbish. She's the person most responsible, together with that fool Biden, who's done so much damage to the country, to be hardly true. But read the rest of what this article says. A lot of this stuff's come from Fortune magazine and also Zero Hedge. And they say under Yellen's watch, the US experienced its biggest debt increase in history. Yellen was Fed chair from 2010 to 2014, and then again Fed chair from 2014 until 2018. In January 2021, the mask came off and Yellen was picked for her political ideology to serve as Biden's top debt printing Democrat, where on more than one occasion she intentionally manipulated US debt issuance to boost risk assets at the expense of a harrowing debt crisis that loomed under Trump's administration, as trillions in debt now has to be rolled over at much higher rates. More to the point, under Yellen, total US debt increased by $6.8 trillion while she was Fed chair or vice chair, and then another $8.4 trillion while she has been Biden's Treasury Secretary just for the last 3.5 years. Absolutely extraordinary stuff. And this is the big sleeper, I think, in the economic picture. And this goes on from Fortune. US dominance over global financial markets has reached extreme levels. And Mr. Sharma thought America was overowned, overvalued, and overhyped to a degree never seen before. You can read most of this yourself. And it goes on, such outperformance isn't restricted to stocks either. In 2024 alone, $1 trillion in foreign capital has poured into the US debt markets, nearly double what the Eurozone's attracted. America controls more than 70% of the global market for private and equity and credit. It's a big statement, isn't it? In the past, including the Roaring '20s and the dot-com era, a rising US market would lift other markets. Sharma wrote today, a booming US market is sucking money out of the others. And that seems to be quite obvious. So have a look at this. This is what's been happening with the national debt of the United States, and you can see from 2020 on the real leap up. It was already on a very high trajectory. Biden and Pelosi, the emerita, meaning emeritus person, who has no longer held that position, as described by the Democrats at least. I don't know what she's the emerita of, apart from a complete disaster. The money that Biden and Pelosi in particular have worked together to spend is it's truly mind-boggling, and it's beyond reasonable. It's just should be scratching your heads about it. And of course, if you look at that, you'll see that 2000 to 2024, Mr. Trump is not exactly a frugal person who is likely to be controlling this rise in spending by the government. So here's what President Trump added in his previous term as the President of the United States. 8.4 trillion was the net increase in debt during his period in office. And what's really interesting is if you have a look at the various categories, it starts off other legislative actions, further consolidation appropriation act, then the budget, then tax cuts and jobs, other COVID relief, response and relief act, and the CARES Act. And what you should be thinking about this is that a whole lot of this expenditure, of course, is mandated by Congress. And a whole lot of it is directly related to existing legislative programs, which Trump's not going to be able to do much about. And I guess the basic concept of Trump is he is a big spender, and it leaves us with a couple of things to think about. First of all, national debt is opaque and sticky. It's very, very hard to get rid of, as I say, because so much of the national debt is it was all created by Congress, but it's legislated. It's legislation that requires certain billions and billions of dollars to be sent in specific ways. And that's opaque, a lot of it. If you can actually follow how what comes from Congress finishes up getting paid, you are a person who's paying a whole lot of attention because it's not simple. But that debt is sticky because that debt largely is created in response to certain conditions that members of Congress wanted remedied. In other words, spending just doesn't happen without in the United States, without a reason by members of Congress to vote for it. And that means that for vast, vast tracts of this existing national debt, it's benefiting one or more members of Congress or the Senate. And they're going to be very defensive about that. That's not something they're going to want to let go easily. And with all the euphoria about Trump, we know the first thing he's going to do is make his tax cuts permanent. So there's no great source of money coming in from revenue. And US government, I'm going to say not as bad as the Australian government, few places are, have been spending beyond their means for years and years and years. And you think about the basis of politics that all politicians are promising various groups they'll do something for them, they'll do something desirable for them, and that something desirable always costs money. So in one respect, in the most basic form, political elections are basically who's got the biggest bribe for the people, and the nature of that bribe changes. At some stage it's financial support for students, financial support for dreamers. There's always an issue that's running underneath it. But it's sticky. You won't be able to cut it without some dramas. And I know we've got Vivek and Elon running Doge, the Department of Government Efficiency. And we're all a bit overawed by Elon. And I mean, truly his accomplishments have been extraordinary, no doubt about that. But cutting down on expenditure is going to be a whole lot tougher than it appears. There'll be there's a lot of frivolous spending going on with the grants in particular. It's easy to find a grant for hundreds of thousands, maybe millions of dollars about something that is so superficial and irrelevant, you just got to scratch your head. But as I say, the vast majority of government spending is legislated spending, and it can't be undone without Congress. And one of the interesting things about the last US election, whilst it was fabulous for Trump, is what a small majority he's actually got. If you're on the outside, you'll be thinking that there were 7 swing states and Trump finished up winning them all. But his margin in winning them is very, very small. It's like 1%, 2%. And if his election victory was so overriding, so all-encompassing, that should have been reflected in the numbers of the Republicans in the House of Representatives and the Senate. And basically it's not. He's going to have a margin of, Trump will have a margin in his favor of 4, maybe 5 in the House of Representatives, 4 in the Senate. But already some of that is disappearing with the folks that Trump's picked to be his new cabinet officers, ambassadors, etc. But it's such a small majority, isn't it? And US is not alone in having some folks, probably more than anywhere else. US federal representatives, both in the House of Representatives and in the Senate, are very civic-minded. They understand they've been put there by their electorate to do the will of their electorate. And most of them are really understanding about that. Whereas in other countries, under the Westminster system, Britain, Australia, New Zealand, Canada, the politicians are chosen by the various ruling parties. And all of those countries I've just mentioned have basically a two-party system. You're either Liberal or you're Labour, you're either Tory or you're Labour, you're either Conservative or you're Labour. And that's why politics is so sticky in America. In Australia, New Zealand, Westminster systems, if you go against the wishes of your party leader, you're out. You lose your endorsement, or you certainly can be sure you won't get endorsed by the party to stand for election when your term is up. Whereas in America, and in particular in the Senate, there's a very high tradition of individuality, and without even thinking about it, you can immediately think of 3 or 4 people in the Senate who are not going to roll over for Trump under any circumstance at all. So it's not going to be easy, and managing national debt is going to be a lot tougher than anyone thinks. So national debt is sticky. Politics is sticky in that same way I've been talking about. And all that debt that they've created, and it's been a joint effort. I mean, Trump was not immune from it. He was a huge spender, so was Obama. And of course, Biden and Pelosi have made them look like bankers. Honestly, just total insanity. And from an outsider's point of view, it beggars belief that they could do what they've done. And I think the damage they've done to the American economy it hasn't come home to roost yet, but sometime or other, the old adage, someone's got to pay the piper eventually, and the market's not going to be too happy about that. So anyway, let's hope it's a long way away. So have a look at this. You guys are lucky. This is the idiot that we've got as Prime Minister. His name is Anthony Albanese, called Albo, and this is a cartoon by one of our leading cartoonists in Australia, and Johannes Leake, his father, was a legendary cartoonist, a great mate of mine, and a real character. Loved to drink. He loved going to the races. He was an amazing person. But this is what we've got now. This is Albo. He is part of the Australian Labor Party. He's the leader of the Australian Labor Party. And the Australian Labor Party is the equivalent of the Democrats, but with a more socialist tinge. Bernie Sanders would be welcome in the Australian Labor Party. And they all share the same worldview. And that view is that they are so intelligent and have such worldly knowledge that they can make better decisions on the economy than the market. So this always happens with Labor governments. In some sense, you can think of Labor governments as a bit of comic relief. When the Conservatives in this country, the federal party is the Liberal National Party coalition. Not sure they even call themselves the National Party anymore. That's the country. Used to be called the Australian Country Party. That's the cow cockies and farmers in conjunction with the Liberals, who are not liberal. They are the Conservative Party. They are the Australian Tories, if you like. And periodically they become so bad that the Australian electorate votes in Labor, thankfully for not very long. And we have to put up with this stupidity and shenanigans. And the story about Albo, who's been a great friend of the socialist media, which is pretty much 90% of the media in Australia, as it is in the States. He has been touted as a leader for years and years and years. And when Bill Shorten failed to make the grade, which I think was a shame. I think Shorten was not the most intelligent Labor people that I've ever met since a long time. But then Albo gets himself promoted as a Prime Minister. And his background is that his formative years were as an assistant, as a member of the staff of a gentleman called Jim Cairns, who's long departed. And Jim was variously somewhere between a card-carrying communist and socialist. And Albo just adored Jim Cairns and thought he was the most important shining light of his life. So we get a lot of comment about Albo's political ideas and what have you. And as you can see, the tenure of this wonderful cartoon is that he's so weak, there's a little man with a big hat and a pair of Y-fronts. And these are the different outfits he's got. He can be pro-Palestinian when he wants to. He can be pro the Voice Treaty, which was a very divisive thing that he brought on Australia, modelling himself on the South African model. He got his pro-Palestine shirt there. He's got his tennis gear there. He was pictured with having a game of tennis with the Labor Party's biggest donors down in Melbourne this week. You can see he's actually got a friend of the Jewish community shirt there to wear with the Jewish star, the Magen David, on it. He's got a rugby league team he follows, and he described here as public housing Albo, with his belief that he was raised in public housing, and public housing is a wonderful thing for Australians, etc., etc. And of course, his actual what he does as opposed to what he says is entirely different. You can see the final uniform in the layout on the bottom right-hand corner has got the flying kangaroo on it. That's the insignia for Qantas, Australia's national airlines. And of course, it turns out that Albo has just been getting free upgrades endlessly, and his son has become a member of the exclusive Chairman's Club, which determines which of the private facilities you can go into at the major airports. So what's really going on with Albo is none of those things. He was married to a very nice lady, Tebbit. She was a politician herself, and she got sick of him and left. And Albo remarkably quickly jumped up with a new partner that he's going to marry, he says, and she is a much younger version, and frankly, it's not uncommon for men at a certain age to do these things, and she is an attractive, charming lady. But Albo's been having himself basically a free pre-honeymoon every overseas trip, and of course there's plenty of them for Prime Minister. He's been on the VIP jet with his new lady friend, and sometimes his dog. He's got a small little puppy that often goes on the government VIP jet with him. And Albo's literally been having a pre-honeymoon, traveling around the world to any invitation that he can get that involves international travel, staying at nice, expensive, very fancy hotels, etc., etc. And in the middle of all of this, Australia in its worst housing crisis for decades, caused, of course, by a Labor government that just can't stop bringing people into the country. 650,000 this year. This is Australia's a country of only 23, 24 million people. There are 650,000 came in the last year, migrants. That's migrants. Don't worry about the ones on the visa, the students on visas, everyone else. Incredible. And we've got no houses for them. We can't build houses fast enough. But in the middle of all this, and hard to think of a more failure to read the room, senseless thing, Albo's often he buys a $4.2 million house up on the central coast of New South Wales, which is all beaches. It's a lovely part of the world. And he says his new lady friends, she's a born coastie. You've got to have the big house there. Well, not sure how full-time politicians who've never had a job in private industry can afford a $4.2 million house. But they seem to be able to do it, don't they? Bob Hawke was a great example of it. They work for a government salary, which is supposedly fully taxed, I guess it is. They managed to turn up with a whole lot of money. And that's who we've got, this idiot. And he's supported by Australia's Treasurer, Jim Chalmers, who likes to be called Dr. Jim because he's got a PhD. And as it turns out, his PhD is in political science. And his dissertation, his doctorate, was earned by writing an article on a prominent historic Labor figure. And this guy was doing an arts degree, and he's got his PhD on top of it, none of which has anything to do with finance, the economy, real business, real life in the marketplace, but that's our treasurer. And they're up to all sorts of tricks with off-balance sheet stuff that the press hasn't sort of bothered to report, because most of them, 90% of the media in Australia are strong left-wing followers. So anyway, that's who we've got. So you're lucky guys in America. At least you've got a guy with some really good worldwide and real-life experience. And a lot of Trump's ideas are very, very good. It's exactly what the country needs. But it's not going to be as easy as anyone thinks. Okay, so why did we go today? We always like to let you know what we've been doing in the market. And what I'm going to show you is every single market that we cover, with the exception of the NASDAQ, which just followed the S&P with more volatility, more upside emotion yesterday, a little stall today. and also with the exception of soybeans, which is in a consolidation. But I'm showing you every other market, futures market that we have, and as usual, Forex is underrepresented because I don't get the data until after 6:30 US Eastern Time, as my data supplier Trade Navigator are not so enamored with Forex, it appears. They used to be. In fact, I started off as a Forex trader like Greg Palladini, who's with us today. And gradually over the years, I've moved much more into futures, but still have a strong interest in Forex. Have a look at this. This is what we did today. Here was crude oil. It's been on a TO3 and a time buy signal. This is the S&P. We had a blue line and time sell signal right at the high. We had a correlated buy signal. Remember that all equity, US equity markets, Russell, Dow, NASDAQ, S&P, and Germany's DAX are also highly correlated, that they tend to move in the same direction with a high degree of regularity. And they do that so much, and I'm aware that the Russell is a bit of an outlier these days, but over the years, historically, that correlation has been so high that a signal in any one of those markets can be executed in any other. So when I say here correlated buy signal, we had a buy signal in the Russell, and you could have, if you wished, executed it in the S&P, and you got a nice big bar up, which was against the apparent trend. So I hope you remember to exit first profitable close. Let's see what else we had. Here's gold. Gold's just been an absolute boon to everyone, hasn't it? It just runs and runs and runs and runs. I mean, this little rally up here into Wednesday's high was worth about $8,500 per one contract. Wonderful. And that, of course, set up a TO3. And I'm not sure, I don't think it was a blue line signal. It was a blue line signal in silver, and TO3 signal in gold, and you got the big one-day bar down today. Here's copper, and it had a TO3 sell signal on Wednesday to be executed on Thursday, and we got a big bar down, which itself is not terribly interesting because it pulled off its lows, didn't give us much, if anything, to the close. But have a look where the high and low of that outside bar is. It's literally just a matter of ticks away from the red lines. These markets just go on bouncing between these Danielcode lines. And I'll remind you that these red, black, and blue lines, these Danielcode lines, are entirely proprietary. They have nothing to do with old highs and old lows. They have nothing to do with Fibonacci, which is, in my view, not so much a swear word as an act of gross stupidity by Eliot, but nonetheless, everyone's followed it on since then. But how these markets react to these Danielcode numbers is quite extraordinary. If you're not subscribed to the members charts, you should be, because this is where you see all these lines. This is the Russell. We had a TO3 plus sell signal for today, as this market rallied one bar up against the trend, and then we've got a nice decent sell-off today. This is silver, which had, this is sort of kind of interesting. Look at it closely. You had a TO3 and a blue line sell signal based on Wednesday's bar, which went exactly to the blue line, almost exactly, a matter of a handful of ticks difference. Look what this market did. It kept going up, but look where it turned. It hit the red line at 3,300 there. Let me find that for you. It's kind of interesting, it is to me. Here we are. Yeah, it ran up and it hit that red line at 3334. The high was 3330. 4 ticks variance. Amazing, isn't it? Those of you who are not looking at the 6-day charts under the Tradecraft banner of our website, you should be thinking about it. It's an extraordinary thing that the 6-day charts that I create for some members, where every bar is 6 trading days, you would expect it wouldn't be as accurate as the daily chart. The amazing thing is it is. And at our next webinar, I'll show you a couple of instances where a bar has clearly gone through a Danielcode blue line or red line, and the next line sitting there becomes like a neon light. It's flashing at them, and it goes there, it gets there. And it gets there with very, very small variance. If you have a look at the under the Tradecraft tab, you'll see the variance. 0 variance, 2 ticks variance, 6 ticks variance, like nothing. Quite extraordinary. Anyway, here was silver for you. It was a nice trade, wasn't it? Easy 4,200 for just knowing the Danielcode TO3 and blue line signal, which we publish every day. This is wheat. We've had a nice run up in wheat on a TO3 buy signal. 5 days up into a TO3 sell signal at the red line, and decent day down today. Look where it's gone to. Exactly to those red lines that are showing the retracement. It's gone to the 44 line there, and look where the close is. Almost exactly on the 37 line. Markets do this all the time. They follow those Danielcode numbers. Here's US T-bonds. TO3 and blue line sell signal. Straight down, 1, 2, 3, 4, 5 days down, $2,200. And look where it closes. Right at the 117.08 mark, which was a long way away when it started this run down. It had no inkling of that. But today's close is 117.08. There's your blue line, 117.08. That blue line has been on there since the close. And it's exceptional, isn't it? Nothing changes. If you trade options instead, then you need to know where markets are likely to be in 1, 2, 3, or 4 days or more. Go to the Danielcode members charts. It'll all be there. It's extraordinary, and it happens all the time. This is the CAD chief Canadian dollar Swiss franc pair. They had a nice TO3 sell signal right at high. A little rally up, basically a couple of red bars and then 2 smallish bars into a new sell signal, TO3 sell signal. Down it goes into the blue line, and that's what set up the TO3 buy signal today. And that comes from the low 2 days ago, or even yesterday. They're both the same. That set that up, and we've had 2 days up. So as I say, that's apart from this one. This is natural gas. There's always one that's a problem, isn't there? And this was this week's problem. And the problem was that we understood we had a buy signal here, but then it gapped up. Huge. Very substantial gap. And because of the new rules about stop limit orders, the vast majority didn't get filled. In fact, almost no one got filled. That set up its own sell signal, which was elected the next day, and the market went down. That was a bet for nothing, wasn't it, to close the gap, which it did. And then from there, because that was a valid TO3 sell signal, that set up a flip me buy at the failure point for the last valid sell signal. Now, I've been posting often about flip me. I don't post all the time. It's not a product that we're selling to the market, but I want you to always be aware of it, which is why we have that facility there for you guys to look at and be aware of what these flip me signals are. And here we are. We got a little bit back at the end today. So there's always one that's going to struggle and be a problem, and this week it was natural gas. So our Teach Yourself to Trade video series, you can go to the Danielcode website. This is comparatively new. It's a video series. It's at a price point less than half the cost of a live one-on-one tutorial with me. And there are 4 lessons, and you can read what they do here. They teach you the first one's about what is Daniel's code, where did it come from, What does it mean? How do we create the DCA time levels and then convert them into price? And lesson 2 teaches you all about trading price. Lesson 3 teaches you the various methods we use to determine trend, which is most important to your trading, and adds a few trading tips. And lesson 4 teaches you how to create and trade DC time signals. So you can click on that link there. That'll tell you all about the TTT, we call it the Teach Yourself to Trade video course, and that's suitable for anyone. And if you like doing things in your own time and you don't want me to talk to you, that's how you do it. You get the 4 videos, or which ones you choose in the order you choose, and on it goes. Under that banner as well on the website are these 4 videos which come from our clients. I think they're pretty much all with us today. Greg Palladini, Justin, Mark L, certainly we know they're here, have done all this wonderful work for us. And these are the guys who are talking about 400, 500, 600% on margin, more, 800% more, 9, 10. These are guys who've done this trading in paper trading as part of their tutorial and have been kind enough to want to share with you what they've learned in the process. So do take some time. Each of them is about 20 minutes or so. Do take some time and go over them, please. Now, for those of you who have the capacity to do it, the Danielcode tutorial will make you a super trader. That's a tutorial that I teach one-on-one with you. It will be somewhere between 6 and 10 or 11 sessions, each of less than 2 hours, usually 90 minutes or a little bit less. And I will teach you everything worth knowing about trading Forex and futures. And this is the program that those guys who are talking about their 500, 600, 700% on margin, this is the program where they learn to trade Danielcode time cycles. So special Christmas offer, which is coming at us very fast, isn't it? For the first 4 people who can book and start their DC Masterclass live tutorial, which is one-on-one with me, if they can start it before Christmas, I'll offer you a $1,000 discount. And I will add the Beyond Masterclass tutorial, which is normally worth $5,000. And I will add that at no extra cost for you. So there is an offer that is not going to be repeated and you're unlikely to see ever again. If you are interested in crypto, folks, all of these various coins, they trade exactly the same as futures. There's no difference. Because when you look at a chart, what you're looking at is the group psychology, the group emotion of all traders who were present on that day. And really, that's all it is. Markets open where everyone thinks it's a reasonable number. It is bombarded with information all day, market reports, crop reports, mining reports, you think of it. And after the market's digested all of that information at the close of the day, it will close at a number which represents the real value of that particular market on the day. And crypto works exactly the same. We have a few guys who are very keen on crypto and they learn to trade futures and they can trade crypto like an absolute master. So for the Teach Yourself to Trade guys, if you buy the whole TTT course, video is wonderful. I'll add a 90-minute teaching session one-on-one with you, with me personally, to tie everything together at absolutely no cost for you. So you'd have to secure that offer and you're able to start before Christmas. Email jneedham@thedanielcode.com and do it now to secure your spot. Now, momentum bars, we haven't got an awful lot of time left, but we've got 10 minutes. And I want to talk to you about these momentum bars. I've touched on them a bit the last couple of webinars. And over the years, I've been undertaking a huge study on momentum bars, and they meet a very specific definition. And what I notice is the market can't start a new trend move without some involvement for these momentum bars. Sometimes they come earlier to move, sometimes they come late. We will teach them as valid if they occur within 7 days of the swing high or the swing low. But the later they come, the less impact they have. the very best of these high-speed trend moves, which is what we all adore, and what Beyond Masterclass is about, is if they happen on day 2 or day 3. In other words, soon after the high or soon after the swing low. And that's showing us the market's made up its mind. And those moves are quite extraordinary. What the Beyond Masterclass course will teach you is the most opportune time to trade, the best time to not be trading, and you can avoid a lot of sideways movement with this momentum bar technology. And as well as that, it's telling you when it's the safest and most profitable time to expand your stop, to let the market run, and to avoid these one-day counter trends that rip into your profits with these lovely long moves. These patterns, as they're setting up, they're depicting the extremes of moves that remain within a notional trading envelope. Think of all those bars as having trading bars and got a big envelope around the outside of them, and it's elasticized, and they can stretch it up and stretch it down. But there's a limit beyond which they can't stretch it, and that's when the market will break out and make a new higher price level or a lower price level and maintain those positions. So at these extremes, markets must react. One of those reactions is the start of an important trend. That's why this stuff has been so interesting and vital. Have a look at this. This is New Zealand US dollar. Forex markets and currency futures have been on an absolute roar this year with the total dynamic movement of the US dollar. And these little black diamonds I put on here show you where these super momentum bars happen. And they're not at the highs or the lows, they come after that, and we know that these highs and lows will have time signals on them, Danielcode time signals. Some of them will have Danielcode price targets as well, which will set up a TO3 or TO3 plus signal for you. But just look at this movement. It's sort of up, a little bit correction, up, big move down, a little correction down, another correction down. Embedded in all of those moves are these super momentum bars, and they add up. This is the Australian US dollar pair, and just this runoff that happened to be on my chart at the time, that's worth about $8,300 per one contract at $10 a pip. So you make a lot of money with this stuff because these are the parts of the market where you're just going to be a little more relaxed about your stop loss. Now that raises another problem. The minute you move away from trading Danielcode price or time, which has very strict stop loss protocols, you're in a little bit of a no man's land. You could use a 2-bar stop in this period. I actually use most of the time a 3-bar stop. I also can use a 2-bar stop that's slightly different, because a 2-bar stop is so popular in the industry that it's become a target, and periodically the market will just pop that 2-bar stop out just because it can. So it requires a bit of thinking, but the rewards are huge, as you can see. So this is not a trading system. Creating and trading Danielcode time signals, that's the trading system. That's the best trading system I've ever seen or ever heard of. That's the trading system where all of our clients are saying 400%, 500%, 800%, and more. This is not a trading system. This is an extension of the Danielcode time trading system. And it has these two very specific qualities. Firstly, it signals that those bars that foreshadow a good trend move. And secondly, it causes trading activity as these momentum signals are at the maximum that an imaginary envelope around our daily bars can stretch. So there's a bivalent quality to these special bars, meaning two values. One creates extended moves, the other creates a correction, and that correction itself may start a new trend. So creation of these special bars signals the most profitable time to be trading. One of the rules you can think of, Greg, is that you'll start trading an extra contract. Just do your normal Danielcode time trading perfectly. Still the best system we've ever seen and heard of. When you get to one of these momentum bars, start trading another contract on top of it. That's just one way. We've got a few people doing that. So these momentum bars show a vibrant trending market. And think of that. You can see I've marked in a blue ellipse the earlier ones. I've been talking to you about this for quite a while now, on and off. The black Momo Zero Mom bars show the same thing. And have a look at this. This is the dollar yen. Look at these trades, and you can do this in currency futures. Don't forget, you can take the Danielcode Forex trades and you can execute them in the currency futures that are available through the CME. Wonderful stuff. Big moves like this mean big money. Notice that in every one of these big moves, there's a cluster of momentum bars. Because what's most important to you is look what happens when there's no momentum bar. This is soybeans, which is in a consolidation. It may not look like consolidation of a normal set. It's a rising consolidation, but it's still a consolidation. Every buy signal that's been elected has turned around and closed in the middle of the range. Every sell signal that's been elected has turned around and closed in the middle of the range. Now, most people think that consolidation is described as, oh, the market's strengthening itself, preparing for a move. That's absolute rubbish. Consolidations are a diabolical plot to kill traders. It's that simple. This is not a market that's going nowhere. This market knows exactly where it's going, and where it's going, it's taking a buy signal and reversing it so it's not profitable. It's taking a sell signal and reversing it so it's not profitable. So these consolidations are deadly. Absolutely deadly. Even these ones that look like, oh, well, it's a rising consolidation, it's a flag or it's something else, that's absolute rubbish. It's a consolidation, and consolidations are a beast that's sent to devour your equity. So if you can identify these consolidations before they happen, and remember, we only get decent momentum bars within 2 to 3 to 4 bars from the swing. If you haven't got that, stand aside on that market, or else start using trailing stops both ways. Okay? Knowledge of when you're going to have these probable consolidations that don't look to a consolidation on any other measure. It's simply the absence of these special Danielcode momentum bars that is telling you this is a consolidation. And that knowledge of its own is going to save you a fortune. Here's the Euro USD in the Forex. Have a look at it. While you're getting momentum bars up or down from either a swing high or a swing low, that's where we're measuring all the time, this market moves. This market is wonderful. It's made a ton of money for us. Look what happens when it gets to an area with no momentum bars. There's nothing else that tells you that's consolidation. It's a rising wedge to most people, which is just meaningless Elliott wave BS. It's a consolidation that's killing your trading. Every buy will be reversed. Every sell will be reversed. And once you get that, put a horizontal line on the high of the consolidation, another one on the low of the consolidation. And to get a breakout, it's not just a bar that most people think it is. It has to be a close outside those loans. That's what constitutes a true breakout in the Danielcode lexicon, which of course is the master of markets. This is the euro. I think we looked at it. This is a slightly updated chart. Wonderful trending market, up and down and up and down. Super stuff. Now look what's happened when there's no momentum bars from the latest low. No momentum bars? Consolidation, you're losing money. If you knew nothing else but that, you would become the best trader in the world, I'm telling you. If you can avoid consolidations before others can, you're just enhance your profitability magnificently. I can't stress enough how dangerous these consolidations are. And no, they're not getting ready to make another big move. They're just being a bastard and destroying your equity. That's what they do. Every buy will fail. Every sell will fail. That's what happens. Then you get a breakout. Right here, you can see the breakout above that little pink triangle. That's your breakout. That's telling you it's safe to trade. You got a sell signal on that bar. Down it goes. Nice run down, 6-7 bars, straight into another consolidation. That next breakout from that consolidation has got a momentum bar marker on it. That broke through the envelope. That market is now free to move outside the envelope. Okay. All of this stuff about momentum is an extension of the Danielcode time signals trading. Learn to create and trade Danielcode time signals will make you an elite trader. Do it with a one-on-one tutorial with me if you can afford it. If you can't or you don't want to, both valid reasons, go and use our TTT, Teach Yourself to Trade videos. They're a much, much cheaper price point and they do the same job. They're absolutely wonderful for all you budding traders. Okay, well, we're a few minutes over time, folks, for which I apologize. If you haven't already, please help yourself to a free trial. Any issues, if the market doesn't want to give you a trial because you've had one before, the computer will remember you and don't want to give you a trial, just contact Terry at support@thedanielcode.com and he'll sort that out. Finally, here's our disclaimer, which I do ask you to read, and I always caution you that if you don't know how to trade, you're going to lose your money really, really fast. The industry says you'll lose your money in the first 90 days. In my understanding and experience, you lose your money in the first 10 to 15 days. But once you understand how to trade properly, you can make a whole lot of money really, really fast, as I've been showing you today. And honestly, I know these warning statements are for people who won't listen anyway, but what a stupid warning. If you don't know how to trade, you're going to lose money trading. Duh. If you get in the car and you don't know how to drive, you're going to damage someone else's car, damage your own car, and maybe kill yourself. You wouldn't start to drive a car if you had any brains at all until you had learned to drive properly. That's why we have people requiring a test to get their license, to show that they're capable of trading, of driving properly. We don't have that in trading, and just use your common sense. It's the most wonderful business in the world, trading financial markets. This is the place to learn. It is proven the best program that I have ever seen. Learn to trade properly and you will have a wonderful and happy life. You take more security for your family. You create a new job flow, a new cash flow. It's all wonderful. Anyway, sorry for being over time now. I do apologize. I thank you for being with me today, and I look forward very much to speaking with you at our next webinar, which incidentally is going to be next week, folks. We normally have them every fortnight, which means 14 nights or 2 weeks, as Greg's son knows. But that falls on Boxing Day, so we're going to have the next webinar, be our final webinar for the year next week, next Thursday. I do hope you can be with me then. Okay, wonderful to have had you here, folks. Hank, grand to have you all, and look forward to seeing you again at our next webinar. Anything you're interested in before that, shoot me an email. I'll be more than happy to prepare something for you at our next webinar. From me, it's bye-bye for now.